Hey, it's Mike Watson. Before we jump into this month's email, I just wanted to say that if we haven't had a chance to chat recently, I would love to set aside some time to, talk with you and catch up. All right, so for this month's email, we're going to be looking at the statistics on how the market fared in May of 2021. We seem to be coming out of COVID now, and this time last year, things really started finally hitting our local market pretty hard in May and June of 20. So I thought at the end of the video, I would go in and do a comparison of how the market is now versus how it was in 2019, which would have been a normal market for us, and see how those numbers stack up if we're going into more of a normal world right now. Compare that against how we were in 2019. Alrighty, so for May, the number of new homes to come on the market was 601. That is a 10% decrease from April, but it's a 6% increase versus May of last year. Not a big difference there. Number of homes to go into escrow in May was 587. That's up 5% from April and is up 20% versus 2020. And like I said, that's when the market seemed to finally start getting hit a little bit by COVID, and it was with people getting furloughed from work and layoffs, and lenders also tightening up on criteria to make sure that people had essential jobs and all of those things. So pendings 20% increase, pretty good, but it was only 5% more from April. The number of homes to have sold in May was 478, 51% increase versus last year, 5% decrease versus last month. Now you see why I wanted to go look at 2019's numbers. The average sales price for May was $437,000 in change. That is a 24% increase versus last year. We've seen pretty steadily over 20% year to date. It was a 5% decrease from last month. I think that our highest average selling price has been closer to $450. So we're still a little bit lower than that, but we've just been bouncing along that price pretty much all year. The average days on market is down to 17. And the way that we measure this is from the time that a property goes live in the system as being for sale until the time that they accept an offer. The average has been 17 days. I would say that the average is probably really closer to 5 days. And the difference in that would be from the time that people are allowed to see the home versus when an offer is accepted. We're seeing that a lot right now. Like the home will go on the market active sometime during the week, but there won't be any showings allowed until the weekend. And then the seller makes the decision in the first couple days of the following week. But beginning to end, 17 is super short. It's 9% less than last month and 60% less from last year. And it was already on a downward trend this time last year. So that's really a fantastic number. The month's worth of inventory, this is the average number of homes that sells each month divided into the total number of homes currently for sale. We have less than 1 month's worth of inventory. So if we did not have another home come on the market and we continued to sell at our average rate in less than 30 days, we would have no homes for sale. Super low number. A balanced market would be 6 months worth of inventory. So we're 16% of that. It is a 6% decrease versus last month and a 44% decrease versus last year. So, and we've been sitting right around 101 pretty much all year. But it's there, it's low, it's way below, a healthy market as far as being balanced goes. Now to compare versus 2019, I took some notes here. So the total number of homes to have sold January through May of this year, we are at 2,243. And in last year, in 20, we were at 1,942. So it's 300 homes fewer. we had all kinds of inventory issues and COVID and all of those things. So I didn't really want to compare versus last year. So this year was 2243. 2019, number of homes to sell, January through May, 2,250. We're right on point with that. Where we're not on point is that the average number of homes for sale this year is right around 500, and that covers all of the areas covered by our MLS. Usually when I talk about number of homes for sale being around 230, 250, that's only from Roseman to Acton. It doesn't include Tehachapi, Cal City, Mojave, all of that stuff. But for all areas in our MLS, the average number of homes for sale this year has been 499. In 2019, it was 1,551. We're right on point with the number of homes sold year to date, but our inventory level is at a third of what it was on average. The average interest rates year to date for this year, so 21, the average is 2.93. That's higher than, we got down to 2.25, sometime last year. But the average year to date is 2.93. In 2019, the average interest rate year to date was 4.26. That was huge, right? The average selling prices in, this year to date, like I said, just under 420,000. 2019, 310,000. That's insane. So I went and looked at it to see how affordability was, how much your cost of living was this year versus 2019 to see the gap. This year at 420,000 with an average rate of 2.93, your principal, interest, taxes, and insurance payment, so everything all rolled into one, we call that PITI, your payment would be $2,484. In 2019, at the average price of $310, with the significantly higher interest rate of 4.26, your PITI payment is $2,084. That's a big jump. $400 a month it cost for people to live, right? So I got even more curious real quick, and not to be on a tangent, but for the people that bought in 2019, if they sold right now and they took their equity, they would basically be making a lateral move. Their payment would go up about $50, $60 a month. Not a big deal. But I think a lot of why we aren't having a ton of homes come on the market and why we're not quite rebounding back to a more balanced market, at least 1,000 homes for sale, I think is, the affordability from before. So if we took the buyer from 2019 and we took their payment, their PITI of $2,084, if we knocked out their property insurances and their property taxes, their principal and interest payment would be $1,710. If that buyer, and we saw too many of them refinance last year, it's a good thing, right? But if they were to refinance this year, if they didn't take advantage of it last year, if they took that same loan from 2019 and they refinanced, their payment on just the principal and interest would go from $1,710 a month down to $1,270. Their fixed expenses on their mortgage or their rent would have dropped $500 instead of the person who didn't buy in 2019 and bought this year, their payment went up over $400 a month. That's a big deal. Anyway, if you guys have any questions, let me know. And I get the question all of the time, like, hey, prices are high, the monthly payment is high, should I still purchase a home? The answer, typically, and it depends, is yes, because if you're going to be here for a length of time, all of the people who didn't listen in 2019 and they didn't want to buy because interest rates were so high at 4.25, probably kicking themselves right now, which is fine. Live and learn, right? But don't do the same thing again. Don't buy now because you're afraid that interest rates are going to go lower. And if they do, great. Look at the example from today versus 2019. You could drop your payment $500 instead of just waiting to see if rates get better and watch prices take off. And now it's really going to go up. Anyway, if you guys have any questions, let me know. I'd love to chat with you, and I will talk to you soon.